Welcome. Let's talk some Bitcoin. What I'd like to do is spend a few minutes sharing with you how I came to the realization that Bitcoin is literally one of the, if not the best major global assets historically, today, and moving forward. So let's jump in. And as I do, I've got probably 20, 25 charts or examples. So I'm going to try to talk fast and hopefully do a thorough analysis. This is really a fraction of what I've done for this asset class, but we'll cover a good sized surface area. So now, this is Koifin. And what I want to do is, this is going to get a little busy, but what I want to do is I'm going to do a comparison, a side by side. The comparison is going to be the US equity markets, US equity sectors, some currencies, the global markets, which includes broad markets, developed markets, and the emerging markets, as well as commodities. I thought commodities we should include because we are currently in the early stages of a commodity super cycle. This section right in here is going to get pretty busy, but hang in there with me. I am taking you somewhere. So now let's lay in the major indices for the US markets. This is the S&P 500, the NASDAQ, Dow Jones, Russell 2000, and I'll go through these in detail, but let me get this up here year to date. Okay, so currently year to date, the NASDAQ is up 26%, the S&P is up a little over 9%, which we'll go into in a minute. We're going to layer in all of the equity sectors. I'm not going to do industries, that'll get extremely busy. So there are the sectors, which, by the way, if you can see down here, energy, healthcare, utilities, real estate. And then we're going to go over here to the global markets. Now we're going to circle the globe. Broad markets, which is developed, emerging, and frontier. And then the developed markets, Germany, France, UK, Japan, and then the emerging markets. And then let's layer in the commodities. So like I was alluding to, this thing is extremely busy, which I'm going to hop out of this section in a minute, but I just want to illustrate a point. Oh yeah, first of all, let me layer in Bitcoin. So now we're layering in Bitcoin. Okay. By the way, this is year-to-date view, and if you take a peek, Bitcoin is number one out of every single one of those, I'll just say asset classes, that we just checked on. And Bitcoin is up year to date at 62%. And then the next one in second place is the communications sector, XLC. And third place is the technology sector, XLK, which is also up, it's up 26%, almost 27. And then the NASDAQ 100 coming in fourth at 26%. And then bringing up the absolute bottom is natural gas, minus almost 42%. I'm going to flip this to a larger, so we can take a peek. I'll clean this up. Yeah, here we go. So I really just wanted to share with you, again, year to date, and hopefully this is a little easier on the eyes, but this is Bitcoin. And then if you see down here, I'm just going to call, there's Bitcoin, and then there's the herd. So this is a 1 year. Now I want to spend a minute and share with you why I think I'm going to go back in time and share with you why I think Bitcoin is the long-term player, because history doesn't repeat, as they say, but it definitely does rhyme. Now, I'm not going to I'll do the 1 year. It gets a little busy, so I'm going to get out of, actually, I'm on the dailies. Let me go to the weekly. It's still going to be busy on the yearly. Let's go to the 3 year, see if we can start to see anything. It's the 5 year that really starts to pop. So this is a 5 year window, and Bitcoin is the number one winner. It's up 225%. XLK is in the second spot, and it's about 109 points less than Bitcoin. And then we've got the NASDAQ 100, which is at 100%. So now this will even become more obvious when we go to the 10 years. This is just a massive zoomed out look. You remember the herd I was telling you about? Yeah, this is the herd all the way down in there. It's all these the line charts squished together. And if we just zoom out and just take a peek, there's really no comparison. So I'm going to dig into Bitcoin too in a few minutes. I've got a few different views and charts. So anyways, I just wanted to share that with you. Now, Bitcoin. Why is Bitcoin around? In my opinion, this is the number one reason why Bitcoin is in existence. It's a hedge. And again, in my opinion, it's a hedge against this. This is it says US debt lock. It's actually I'll call it the global debt clock, stacked ranked by countries with the most debt. And the United States, we are in first place. And then China at first place at almost 32 trillion, China 14 trillion, 13, Japan 13 trillion, and so on. The section I want you to draw your eyes to is this column right here. This whole column right down in there, okay? And there's a reason why I'm highlighting this. So if you could, just the debt to GDP ratio. So right now, currently, the US is at 95%, China's at 81, Japan at 299, Germany, et cetera, okay? So now, why am I showing you this? We're on Investopedia, and I want to share something with you that the World Bank put together. And they did this a few years back. It's called good versus bad debt to GDP ratios. Now, this is a study done by the World Bank. They found that countries whose debt to GDP ratios exceed 77% for prolonged periods, they experience significant slowdowns in economic growth. So this phenomenon is even more pronounced in the emerging markets. If you remember, we were taking a peek at those. So now let's just go back to this. Again, anything over 77% for prolonged periods of time. And the US is 95, China 81, Japan, call it 300. And if we just go down here, so there's Australia, and those are some of the smaller markets, so this counts as well. So I won't go into too much detail. If we're scanning this at a high level, the world globally is in a world of hurt in regards to the debt. So in my opinion, this is the number one reason in terms of the hedge. Now, let's talk a little bit about the fundamentals of Bitcoin. And I thought I'd start here with ARK Invest. And for those of you that are familiar with ARK Invest, Kathy Woods is the founder, and I'm a huge fan of Kathy. Her company, hedge fund, puts out a monthly report. It's called the Bitcoin Monthly, and this one is dated April 30th. And at time of recording, it is May 19th, 2023. So this report's just a few weeks old, but it's still very relevant. And so I wanted to just share a few thoughts. So in this, I'm not going to go through the whole thing, but I'm going to focus heavily on the market summary. And I'll share probably a few different pages in here. We'll move on to another validation point right here. Bitcoin consolidates as fundamentals strengthen. The first point she makes is there's a boost in the transaction count. And I have that. I have a slide on that later in this video. So transaction count and active owners signal strong network activity in a bullish market. What I'm going to share with you is these are all-time highs. Long-term holders spent output price ratio. This is suggesting that the market is trading at a profit. So this means that most people that have purchased Bitcoin are in the money. And then now down here is if we focus on this column down here, there's network security, network usage, and holder behavior. And then what I want to do is just focus on this column down here. Okay, so now network security, if we look over to the right, is bullish. And that's for the mining difficulty. Mining revenue is neutral. Network usage is, in terms of active owners, which I'm going to touch on, is extremely bullish because we're at all-time highs. Transaction volume is at neutral. And then holder behavior, long-term holder supply, bullish. And then the locked supply is also very bullish. Bitcoin's cost base is providing important support. So now, long-term valuation, short-term valuation, and market sentiment. And again, if we focus right over here, which kind of summarizes at a macro level, so the long-term valuation, the market cost basis, and the percent supply and profit. Again, those are for people that have bought or are in the money. Bullish, bullish. Short-term holder cost basis is bullish. Realized market returns, bullish. And then the perpetual future basis and the expirational future basis is bullish and bullish. Now, if you're not too sure what some of these are, I would encourage you to use ChatGPT and ask GPT what some of these are as an example if you need some help. But also, this report, as mentioned, comes out monthly. And I don't know if I said this, but it is free. And it's loaded with really good, in my opinion, unbiased information. All right. Now, we're going to move on to something a little different. We're going to move away from Bitcoin and assets just for a minute. And I want to share a theory with you. And I'm a huge fan of this theory. So we are on Investopedia and Elliott wave theory. What is it and how is it used? So as mentioned, I am a huge fan of Elliott wave theory. So understanding the Elliott wave theory. So the theory was developed by Ralph Nelson Elliott in the 1930s. What he did was he studied 75 years worth of yearly, monthly, weekly, daily, and self-made hourly and 30-minute charts across various indexes. And what I'm going to share with you what the theory looks like in a second, but one thing I want to call out today is we're now 2023. So we're approaching almost 100 years. And even to this day, the Elliott wave theory, it's still in play today. In my opinion, there's one weakness, and that is there's two. First of all, you have to know what you're doing. So like the Chartered Master Technicians, the CMTs, these are excellent people that understand Elliott wave. So the reason why I say that is because if you ask 10 different people what the wave counts are, you could potentially get 10 different answers. But the other weakness is that trying to find or identify bottoms. But outside of that, I'm a massive fan of the theory. Now, here is, at a very high level, it's basically around wave counts. So there are 5 total waves, and of the 5, the first one is an uptrend, the third one is an uptrend, and the fifth one is an uptrend. And then the second is a downtrend, and the fourth one is a downtrend as well. But the thing I want to call out is that we are currently right here as of the last 3 months for Bitcoin, and actually for the markets, because I still think we are coming into a soft landing, and I've got several different charts that I want to share with you to validate that. But we are right around this section right here. So what does that mean? This means that when this third wave right here, this is typically twice as long as the first wave. And when it comes to the third wave, this is where the smart money buys in. And what I mean by the smart money is like hedge funds. And the sentiment for this intersection, this inflection point coming out of this correction and into the beginning stages of this third wave, it's very bearish. It's like the sky is falling. However, it's a very bullish pattern. So if you compare the sentiment right now in mainstream media or on social media, it literally feels like there's an asteroid directly heading towards the globe. By the way, this book, Elliott Wave Principle, I've read this twice if anybody's interested. It's, in my opinion, the best book out there on the Elliott Wave theory. Now, who uses the Elliott Wave theory? I want to share with you, and this is one of my favorites, all-time favorites, but Paul Tudor Jones. He owns a hedge fund, and his net worth is approximately, according to Wikipedia, a little over $7 billion. But he is a huge fan of the Elliott wave theory. All right, let's take a peek at some charts. So these are the same charts. So this is the total 2. And what this is the entire crypto market cap, or altcoins, excluding Bitcoin. And you're probably saying, John, how come you're showing us the altcoin market and not Bitcoin? I'm trying to share with you some validation points why I think that Bitcoin, the bottom is in for Bitcoin, and that we are entering into this, coming out of the second wave and entering into the third wave. So now, up top, these are 4-day candles, and then down below, it's a daily time frame, and I'm going to get down to this lower section here in a minute. But what I want to share with you is this blue line right here. And if you see this, it goes all the way across. And by the way, this right here is the 2017 all-time high. And then if you see, we had price action come down here and respect it. So it's acting as the 2017 high is acting as support now. And it came back down again as acted as support. And this in this green section here, an ascending wedge in terms of a pattern. This orange line right here is the anchored volume weighted average price, the VWAP, and it's anchored from this all-time high. So when you see the price action, which I'm going to zoom in here in a second, we got the VWAP, and then the other thing is this volume node. So right now, price is just hanging out around this node, number one, and then number two, again, we'll tighten this up, but we had price action break out from this trend line from this November 2021 all-time highs. So again, we had price action break out above that, and it's hanging out around the anchored VWAP and around this volume node. And this is all very bullish. And by the way, once we break out above this node, this is like clear skies ahead. And why is that? And that's because we've got this whole section in here, this gap in there. And when Bitcoin breaks above this node, it should be moving pretty quick, which is really exciting. Let's focus down here. So if you see this, actually, before I say that, go down there. See that arrow right there? Here is that same arrow right there. Now, let's this a little easier. So again, so here is the November 2021 all-time high. So here we are right here. Got the trend line. It reacted, price action reacted negatively. But then we broke out around that, over that trend line in April, early April of 2023. And now price action's above this green trend line, but now we're into a falling wedge pattern, which is also a very bullish pattern. So the other thing I want to call out is this volume indicator is, if you can see this, there is a red line down here. That's the point of control, and price action is just hanging out just below that. And then you remember that orange line, that's the anchored VWAP from the 2017 high. So it's going to take a little bit for Bitcoin to break through that. But again, it's in a very bullish pattern. And again, just for what we're seeing right here, bullish pattern because we broke out above this trend line, this green one from the November 21 high. And we are now in this falling wedge pattern. And by the way, this is a breakout. We had a retest, and then eventually we should see a breakout to the upside based off of the current pattern. So right now we're right below the POC, bullish, and we're just below the anchored VWAP, which is not. So that is the altcoin market cap. By the way, let me say this. When you listen to mainstream media, again, try not to get sucked into the hype. Because of this wave count that we're in, that third wave, remember, it's a very bullish wave count. And as a matter of fact, let me go back to that. When it comes to smart money, this is where they generally start buying, is literally right there. They don't generally buy right here. This is where the early adopters are. But then again, this is where they come in. This third wave is typically twice as long as the first wave. And remember, we are just getting started on this third wave. So I'm calling this, we're in a 4-year cycle. And why am I choosing the 4 years? And that's because of the Bitcoin halving. So we're just a few months into the new cycle. So we're about right here. which means we've got this whole area to go up here. Now, that's the smart money. And then unfortunately, when the dumb money buys in, it has been historically proven that the dumb money buys in on this fifth wave. That's when we get that frenzy. So this fifth wave could be extremely explosive when the retail or the dumb money starts to buy in. 4-year cycle, and we're only a few years in to the 4-year cycle. So your timing, if you're considering getting into Bitcoin, or if you're already in, could not be a better time. Now, let's just take a look at, this is Bitcoin, and I've got the Elliott wave counts here. This is the entire history of Bitcoin, and these are the monthly candles. So this goes all the way back to the Genesis block back in '09. And again, monthly candles. But I've got the macro counts. So if you remember on the Elliott wave counts, the third wave is typically twice as long as the third wave. 2017, that was the finish of the macro wave, and then we've got the second wave. Now, what I want to call out though is that if you look, this is what I love about zooming out. It alleviates a lot of the noise. But if you look at this chart right here, and if you just set aside what this thing is or the time frame, if you just look at this, it just really cuts out the chatter, the noise. Let me just fix this. And what do I mean by that? Is that, again, here's the end of the first wave in 2017, but if you look at this white line right here, that trend line, it is literally acting as support for this price action. And so this is one of a handful of reasons why I am calling that we are in a multi-year bull run, and the bottom is in as of the latter part of 2022 or the early part of 2023. Now, that does not say that we can't come down and price action falls below, the wave counts are off. And that also does not say that price action cannot be extremely volatile and come back down to the $15,000 levels, which I'm not saying it's not, but I think it's a high probability that it will not. And I've got some videos coming up as to why I think that. But anyways, I just wanted to share with you. And basically, in all the macro wave counts that we are in, most of these macro wave counts that we are in the beginning stages of these third waves. I'll do several videos digging into the wave counts in these coming videos. But I just want to share it with you at a macro level. Now, we're still on Bitcoin. So if you remember on the ARK Invest, the monthly Bitcoin report, the total number of unique addresses that was in that report, this is it. So as you can see, this thing is going parabolic. I don't see this slowing down anytime soon. I thought this was easy on the eyes, and I wanted to share this chart based off of the comments made in that monthly Bitcoin report. Now, we're still talking Bitcoin, and what I wanted to do is compare Bitcoin to the KRE. What's the KRE? The KRE is the regional banking sector. Currently, the banking sector for the last few months is literally a debacle. It's falling apart. What I wanted to do is what you're looking at on this chart, it's not Bitcoin, it's Bitcoin versus the regional banks. And so what does this mean? So this means that Bitcoin is basically going to massively outpace the KRE or the regional banks. And let me explain. So this rounded bottom right here, this is called a parabola. And this is one of the most bullish patterns in terms of breakouts to the upside. And if you think about, this is the neckline right here. And once price action breaks above that neckline, it's going to be a measured move from the neckline down to the lowest point. So this basically means that if we just eye this, price action is going to be heading up in this general direction right up here. So Bitcoin versus regional banks, extremely bullish. Now let's just take a peek at just Bitcoin. So I've got Bitcoin on the 3-day time frame, And I've got the volume indicator on over here to the right, and this green line is the point of control. What I want to share with you is this, is that here is our November 21 high. We got rejected here, and we had our breakout. Now we did a retest, and we did a bounce. I call this, I've seen this pattern so many times, I came up with an acronym, a BRB. And it's not be right back. It stands for breakout. So we had a breakout, a retest, and then a bounce. And typically the breakouts are explosive as well as the bounces are explosive. And the point I want to illustrate now, these volume nodes. So there's a gap in here, and I do expect Bitcoin, because currently at time of recording, Bitcoin's at around $26,600. I see Bitcoin coming down in the 25 range, but it should come down pretty quick because there's a gap in here. But I see it coming down to around 23, maybe down here to 20. It's not out of the question. So this is definitely a corrective move, a short term. There are probabilities that it could go below, but I would give that a low probability now. But then once we do find the bottom in the coming weeks, but now let's just validate and see some of the strength in this. And a trading view's got a lot of great indicators, and moving averages are some of my favorite. But if we were to overlay, this is the Fibonacci moving average. I like that because cryptos love fibs. But this is such a textbook if you're familiar with moving averages. But price action is literally on top of all of the moving averages. The moving averages are squeezing, they're tightening. And what does that mean? If we go down here, see where they're tight, and then they just go boom. Basically, where we're at now, I feel like we are right around in here. So by the way, this massive wave up here, this is what a third wave looks like. They're extremely explosive. And that's what I think is coming soon. Once we finish this corrective wave in the coming weeks, then we're going to turn around, we're going to begin that third wave. And those third waves typically start out slow, they meander, but then they do this. That's what I think is coming. Now, one more we can overlay is one of the most common indicators is the Bollinger Bands by John Bollinger. And I'm going to take off the moving averages. This is the 3-day time frame, but the time frame for the Bollinger Bands are weekly. What I love about this is that price action is well above the mid band. So we are still bullish. Now, again, if we fall through this mid band at 25,000, that will definitely slow us down. We've got these nodes down here that will provide some really nice levels of support. Now, what I want to do is I'm going to move a little bit away from Bitcoin, and I want to talk about why I think we're into a soft landing for the most part. There's going to be a lot of winners, and there's going to be some losers. But for the most part, the players like the QQQs, the NASDAQ, the S&P 500, the digital assets, we are in the early stages of a multi-year bull run. And that's, by the way, when I see gold, I see that in a long-term bear market, which I'll definitely have video touching on precious metals, but specifically gold. And I see gold, by the way, going down to around $650 by the end of this decade. And as you're probably well aware, when gold is going up, that means that's the hedge. We've got to run, take cover. But when gold is going down, that means the markets are doing well. So more to come on that. So now what are we looking at? I thought I'd start with BlackRock. So this is BlackRock's actual chart for BlackRock, the company itself, none of their trusts, none of their ETFs. So what I want to draw your eyes to is, again, down here is the -2 standard deviation. So think of like the Bollinger Bands. The bands on the normal settings it's -2 for the bottom band and a +2 for the top band. But you can see right here, price action got close to the -2 standard deviations. And that means once it did that, in theory, like just like the Bollinger Bands, it should shoot up. And then what it did was it got to the +2 standard deviations. Again, same concept as the Bollinger Bands. And when price action breaks out of the top band, as an example, like it did right here, that means price action will probably act as like a slingshot coming back down. But what I really like about this chart, if you look here, this is the mean. So price action, when it got down to this white line in here, price action respected the mean. So if I were to do just a basic trend, yeah, right there. You can do this so many different ways. Trend lines are so subjective, but that'll work for me. That works nice. This is the November 21 high. We had a breakout in early November. Breakout, came back and got a retest, and now we're looking for that bounce, the BRB. And then in addition to that, I like this level of support for it right here, this little chunky area. And remember, these are weekly candles. So we've got price action resting this nice little chunk. I think BlackRock is in a bullish, early stages of a bullish pattern. Let's take a peek at, this is the S&P 500. This is the SPX on the weekly time frame. There's so many different patterns we can draw here, but I'll just say this. This to me looks like an inverse head and shoulders pattern. This is the left shoulder, the head, the right shoulder. But the inverse head and shoulder patterns is might be the number one most bullish patterns in all of trading in terms of patterns. It's about an 80% chance to break out to the upside. We've got price action just breaking above this trend line, which is right below this chunk of this little chunk right here. So to me, the S&P is in a bullish pattern. And then I thought it would be interesting to take a look at NVIDIA. This is a beast of a company for what they do in terms of chips or AI chips for the gaming industry, for the large language models, et cetera, et cetera. These guys are becoming a real player. And this pattern that NVIDIA is in, and these are weekly candles, and I had to show this to you, but we have another bullish pattern. So NVIDIA is fast approaching its all-time high. And before I share that with you, there's a ton of support right here. So it found support right here. That was in early October of 2022. And it's been on this aggressive breakout. You ever heard the term V-shaped recovery or V-shape? I remember hearing that term every day when COVID hit. And this was what COVID looked like, this crash right here. But then the markets basically did this. So this is a V-shaped recovery, but this is also another head and shoulders pattern, like I was alluding to on the S&P. So we've got I was going to draw this, but I won't, but we've got a left shoulder right here. Here's the head, here's the right shoulder. So once this breaks out, this will most likely be a BRB. We should have a breakout, a retest, and then a nice bounce. And remember that from a measured move standpoint, these are typically, so the depth right here, this whole depth, once we break out, eventually the measured move will be about the distance of this section in here. So NVIDIA looks extremely strong long term. And then this is Ferrari. Yes, Ferrari. I thought this was interesting to share. So Ferrari, extremely bullish pattern. So these are 6-day candles, and this is also in a head and shoulders pattern. So here's a left shoulder, head, right shoulder. And if you remember how NVIDIA was about ready to do a breakout, Ferrari already did its breakout. And this is what I'm expecting NVIDIA to do. So Ferrari is at all-time highs. And by the way, when I looked at the Ferrari balance sheets, everything is up and to the right in terms of like profits and EBITDA and margin. And then I also, just for kicks, I looked at Formula One racing as well. But that too, all the core metrics are breaking records. So for example, like the attendance, the earnings, the sponsorship, everything is all-time highs. But the point I want to make is that if we are truly, the sky is falling, we're coming into these terrible times, why would Nvidia, or ask yourself, why would, of all things, Ferrari be doing first of all, at an all-time high and a breakout? By the way, for this particular brand, remember, this is a measured move as well. So this distance in here, Ferrari, the measured move is Ferrari's going to have the same or similar move. So I don't see Ferrari slowing down anytime soon. Great, strong brand. Now, I thought to round out this video on why I am choosing Bitcoin, but also why I think the bottom is in and it is a risk-on environment. I thought I would end this with Berkshire Hathaway. So this is the BRKB, and everybody's familiar with Warren Buffett and Charlie Munger. Let me tell you, these two guys made a savage buy. So about 2 weeks ago, Berkshire spent about $1.8 billion buying their BRKB stock. Again, $1.8 billion purchase, and they've purchased right here. This is a savage buy. Again, this pattern where this green line is, all the price action that's below it, when it came up and hit it, it acted as resistance. So there was a reaction, hit it again, and negatively reacted. But this time it came up, and now the resistance, so this is that classic SR flip. So now this is now acting as support. Mr. Warren and Mr. Charlie, at a minimum, I fully expect them. They don't make the profits with the Berkshire, like the BRKB, like we see in the cryptos. But for $1.8 billion purchase, I can easily see these guys making another 11.5% in the coming months. And I actually expect this stock to do this. So it's going to come up. This is going to be the neckline. It may get rejected, hang out here, but I fully expect this for another BRB. We can have a breakout, retest, and then a nice explosion to the upside. All right, so that is a wrap, and I hope that was helpful, and thanks so much for staying till the end. All right, cheers, thanks.